Hello, bonjour, and welcome to the Don't Waste Water podcast. I'm your host, Antoine Walter, and in today's episode, I'm delighted to welcome back Walid Khoury as my guest. Walid is the founder and general manager of Desalytics, a social impact investment vehicle helping to solve Africa's water challenges. If you missed Walid's first appearance on this podcast by Season 1, Episode 10, he's probably the only real influencer in the water social sphere with about 28,000 followers on LinkedIn. But for some months now, he's even much more than that, having founded Desalytics and currently rolling it out across Sub-Saharan Africa with the target to reach 20 countries by the end of 2022. In a minute, Walid will take us to Ghana, Zambia, Kenya, Nigeria or Cameroon, and he'll explain why this is somehow a triple win for the local players, the water multinationals, and him to dare to address a region that's often left behind. You'll see that he has his special recipes for that, which enable him to achieve a kind of bootstrapped hypergrowth. What's that? Well, I won't spoil it. So let's jump into it together, and remember, if you like what you hear, please share this episode with a couple of colleagues and friends. Please do it, and I'll see you on the other side.
You're listening to Don't Waste Water, the podcast that helps water professionals to improve their wastewater treatment, optimize their operation costs, and keep up with the latest market trends. This podcast is brought to you by GF Piping Systems. As a leading supplier of piping systems made of plastics and metal, GF Piping Systems is the global expert for the safe and reliable transportation of water, chemicals, and gas. For more information, visit gfps.com.
Hi Walid, welcome back to the show.
Hello Antoine, thank you for hosting me again. It's a pleasure.
You were a fantastic guest. I checked by Season 1, Episode 10. That's been a while that we haven't had you on that microphone, and quite a lot of things happened. But right before jumping into that, we have traditions. So let's open with the postcard. And you're sending a postcard from Dubai. So what can you tell me about Dubai today?
It's funny enough that last year also we had our call almost around the same time. Back then it was completely challenging environment. You remember I was supposed to be in France next to you, but I couldn't make it. So this year is completely open. We just started the Expo 2020 in Dubai, so it's very busy, and I encourage you to visit anytime.
Yeah, I've seen the videos of the Expo 2020 and it was like, maybe not that there would be a bad time to go to Dubai, but that sounds like an even better time to go to Dubai. So why not?
Anytime, you're most welcome.
Well, as I was teasing right now, last year I had the very largest social influencer in the water sphere on that microphone with you. That is still the case today, I guess, because I just checked you are very close to crossing the 27,000 follower bar, which places you like not even ahead of everybody else, but simply as the only one that can really claim this name of influencer. And I know we had discussed quite a lot about are you an influencer or not last time, but this time I'm receiving the CEO and founder of Desalytics. And also, you're hosting some panels, which I guess I'll link to that, with some very clever African minds. So I think that's our deep dive for today. What is Desalytics? What are you doing in Africa in general? And what are your targets? But let's start with Desalytics. What is your elevator pitch to Desalytics?
Yeah, so Desalytics relies on partnerships and an innovative impact investing business model to deliver a diverse portfolio of water testing and also water treatment solutions to customers across Sub-Saharan Africa.
So your focus is really on the Sub-Saharan part of Africa?
Correct. And by design, we're focusing only on Sub-Saharan Africa because it's behind in terms of infrastructure, but also in terms of needs, and there are a lot of opportunities also to help.
So that means that when you see Sub-Saharan Africa, which is listed everywhere as one of the two places probably in the world where there's quite a lot to do with South Asia, you're seeing that as an opportunity, not as a lost battle. How did you decide to target there?
Definitely. It's interesting. And you made the comparison with Asia and Africa. So people look at Asia and Africa. And the small nuance is that multinationals are more prone to go to Asia compared to Africa because they see it as easier to do business. So the Sub-Saharan market is kind of left behind. because it's too fragmented, it's too complicated for multinationals to manage, and we can dive through later, if you want, on this topic.
Well, actually, I'll quote you here because I found that in one of your marketing content that you were saying that the Sub-Saharan Africa remains an underserved water market, what you just explained, lacking the presence of leading multinationals. So it sounds like a common pattern. You teased it a bit now by saying that they see it as a most difficult environment to do business. But why is it so?
I think there are a few reasons. So first, a lack of understanding, and it's driven by bias. I mean, we all grew up in what we and we build our own thought process based on what we see. So think about it. When you all grew up, what you see in Africa, you see like famine, you will see wars, conflicts, instability. So in their mind, it's kind of a challenging environment. So this is one reason. Second part is the risks. And these are not perceived risks. These are real risks. So you have the currency fluctuation because you have multiple countries, multiple currencies. You have the political instability, and it's still, in some places, there's a lot of instability. You have a commodities risk. Some countries are relying on oil, like let's say Angola, Nigeria. Some countries are relying on mining, let's say Zambia, for example, and so on. So you have commodities risk also that can really impact business. And also you have the payments risk, because you have a lot of defaults and so on. On top of that, you add the complexity. It's very fragmented. It's like the area I'm covering is 43 countries, so imagine the complexity. So 43 countries, different languages, giant landscape, lack of infrastructure. So just to move from one point to another point, it takes hours. And I think what has been happening for now, it's opportunistic. So companies will look at Africa based on the opportunity and not with a long-term approach because of all these challenges. So that's why for example, if they invest headcounts, for example, or infrastructure in Asia compared to Africa, the returns will be faster in Asia. And especially if you are on stock market company, you need to watch also what your investors are getting as a return.
So that means everybody looks at that. Everybody sees all those hinders to doing business. And you're just saying that is an opportunity. What makes you see that as an opportunity?
Definitely. You have multiple drivers for the African continent, and they might not be immediate, but there are a lot of drivers. So you have first the urbanization. We're starting first from a very low level of water infrastructure, and then you have all the drivers that are changing the landscape. So you have first the urbanization. People are moving more to the cities. You have also the industrialization. So typically, Africa will import a lot of products from outside. It has been shifting completely towards investment in countries, in-country manufacturing. You see like the Dangote Group, for example, in Nigeria. It's now one of the biggest manufacturers across Africa. And also, you're having more and more legislations and enforced legislations in terms of water discharge, water limits, and so on, as well as the demographics with the young people looking for jobs and this creating a lot of needs. And also, Africa is rising in terms of GDP and prosperity. So the disposable income for people is becoming now even higher. So when you have a higher disposable income, you have more demands and you have more needs to address. So it is an opportunity.
You were mentioning the lack of infrastructure. So when preparing for our discussion, I was looking at the numbers. What I found is that 42% of the population in that area is served with safely managed water. 23% is served with safely managed sanitation, and 7% with at least secondary wastewater treatment. So if you look at that as an opportunity, there's a lot to do. If you look at that as the state where we are today and with the target, of the SDG 6 to reach clean water and sanitation for all by 2030, it sounds like we're lacking a bit behind. My question here is, you mentioned the regulations as a driver, and we've been discussing quite a lot on that microphone, how the other thing which might be missing is the funding. What will be the first to come, and how can you trigger it to come a bit faster, if possible?
It's an interesting point. When we look at the market, and we've done a lot of strategies thinking and critical thinking on the African market earlier, also in my career. So it's not just at Desalytics. So we kind of split the market in two. So you have the donor-funded projects, which are, as you mentioned, driven by UNDP, by World Bank, by African Development Bank, all these type of funding donors. And you have also the industrial-driven market. And these are completely two different approaches. So when you go to a industrialist, he wants to produce products, so he wants the best operations and process within his plant to be able to manufacture constantly a product that has good quality. Whatever it is, if it's detergent, if it's cooking oil, any product, it has to have the same level of quality. So these type of customers, the industries, we work with them on return on investment model basis. So you help them by giving them the right solutions, they improve productivity, they pay you for the money, and they are funded. They have enough money to operate. The different one, which is the municipalities and government-funded projects and so on, these are more complex, and this takes longer time. But then you need to be present, because while you're working through the funding, the donors are becoming more and more demanding in terms of what technologies you're implementing. Is it safe? Is it reliable? Can it work in the future? Or once they leave the project, it will not be working anymore, and so on. So you have these two dynamics in terms of funding, and each one of them you have to address it separately.
You mentioned that you're targeting 43 countries or working. By the way, targeting or working, are you already active in 43 countries?
No, not yet. So the region we've defined is 43 countries. So basically, we took out the north and the south. North means Algeria, Morocco, Tunisia, all of the north countries, and the south, which is South Africa, basically, and a couple of countries around it. And for a very simple reason, is that multinationals typically have gone to South Africa. They have opened their entities. They have companies there. Same thing in North Africa. I'm talking about multinationals as suppliers, and they don't need us, so they already have a footprint, and they don't need companies like us to help them fast-track growth. In the fragmented part of Sub-Saharan Africa, this is where they are not, or they have added someone and then pulled out, came back again, pulled out, like in Kenya or Nigeria. But then they need somebody to come and help them across all Africa and to scale up. So we're not yet in the 43 countries, and we're targeting just half of them, 20 countries.
My question there is, we often hear Sub-Saharan Africa. That is one thing, which you could almost imagine as being one country or conglomerate of countries, whereas you are very rightly explaining right now that it's not one thing. It's 43 different countries, and it's fragmented and very different from one country to another. So how, even if you target half of them, so 20 countries or 22 countries, how can you deal with this very high variability from one place to another?
That's a very good question, Antoine. When we started, we wanted to be local because, as you say, every country is different. From outside, we don't see it. I'll give you an example, and this across all Africa, not just Sub-Saharan Africa. I'll give you an example. So one time we had on a call one of our senior leaders asking us to leverage our service capabilities in Algeria to cover our clients in Libya. It's like 1,800 kilometers drive with two borders, customs, clearance. You cannot do it, and there is no way you can do it. From outside, people look at Africa as its one, as you mentioned, Sub-Saharan Africa as its one. But then every single country is different. It's like you're talking about, let's say, the Netherlands and France, Belgium and France. There are differences. Of course, there are similarities, but there are also differences. So that's why the fundamental of our business model is to go with local entrepreneur in every country from the country. So, for example, in Zambia, we have Zambian partners. In Kenya, we have Kenyan partners, and so on. And the idea is that we don't understand the local culture. There is no way we can understand the local. By visiting just for a week business meetings, you don't get the local culture nuances. So that's why our model was based on having local partnerships, small subsidiaries operating in every single country.
Let's talk about these fundamentals of your business model, because I'm very curious here. So that means you have this kind of impact investing approach, if I got it right. So how do you open a country? What happens?
Okay, I'll tell you how it started first. Okay, so then you'll understand where it's coming from. So basically, when we had our call last year, around this time, so I got a call from a young entrepreneur in Kenya. I used to work with him earlier in my previous company. And he had started his business for the last 2-3 years. He was struggling. He wanted some coaching and so on. So we had a few sessions. And for me, it was obvious. He had a working capital issue. And they have lack of access to suppliers. So basically, he has challenges to buy his materials at the right cost because he doesn't have direct relationship with suppliers. And he doesn't have enough money to buy the materials and then sell them again. So basically, if he gets a PO, he has to wait for 5 months to execute the PO. And it doesn't help you in terms of business. So then he asked me if I can fund his purchase orders. I told him, look, if you're going to work on the purchase order, I prefer to be more like a partner, a real partner, and help you on many phases of the business, not just the funding part. And this is how it started. So a couple months later, I was like, okay, we're doing this for Kenya. Why don't we do it in other places? And if you do it in other places, you have more scale. So when you go back to a supplier, you tell him, look, I'm operating in 20 countries. I can help you in all these countries, versus them going country by country to these small fragmented countries. And also for customers, like you have Coca-Cola operating in multiple countries in Africa. So you're coming now to them, telling them, look, we're here in multiple countries, we can help you. You don't have to go to different suppliers for every single need. So it's a kind of an ecosystem altogether that fits well. And when you add on it some of the tools that a small individual partner could not get on his own, like CRM system, but all the features of a CRM system, then you make a difference for them.
So what is your relationship towards those people in the country? If I take the example of that guy in Kenya that you were mentioning, is it like a franchise where you give him some tools? Is it like a conglomerate where you are a bit coordinating all the activities, or is it like a service that you're providing to those people?
I don't have yet the answer, at least for now, because what's happening, like we're a mix of all what you just said. So I was talking to a private equity and hedge fund. So we are kind of a private equity. So we buy shares in small companies, we help them to grow, We don't sell them, but we help them to grow. So this is the difference. But also we are like an incubator, because basically you're finding a small business, we're helping them to scale up and grow their business, We're even testing a startup model. So for example, in Cameroon, we started our own entity. So I found a local entrepreneur and a local engineer, and we started the business together. So basically it's a pure startup in Africa, in Cameroon. So we're testing all these business models, but the overall umbrella is like having in every country operations where our customers can find reliable and in-country inventory of products they need.
And how do you approach the big brands? How do you sell them on the idea that you're going to develop them in the Sub-Saharan Africa?
It's interesting that having been in the industry for 20 years, as you know, you develop a lot of connections and networking opportunities. And I'll give you an example of two of the brands we partnered with, like LG membranes. LG is one of the best in terms of price point, but also in terms of quality. They are very well adapted to the African market. And outside of Africa, they are winning most of the projects. So I got the LG brand because the gentleman who was managing Africa and Europe and South of Europe was part of my team long time ago. Like 15 years ago, I hired him in Algeria. So same thing for Purolite. Also, it was part of my team in the GE days, and because of this culture and networking, they know you, they know what you can do for them. So you have more trust. But now that we're operating in multiple countries, it's becoming the opposite. So suppliers are coming to us saying, you know what, we've seen that we're working with LG, with Purolite, with Hack, and so on. So we want your help.
And why Desalytics? Because what I see in Desalytics is desalination analytics. Is that you're centering around that? Or do you also do much broader thing? Or is my interpretation fully wrong?
I think it's a mix of both. So I have an inclination towards desalination. And by desalination, people look into it as it's just taking seawater, putting energy and wasting energy and getting water. So it's not the case. Desalination, can be used for brackish water, for industrial processes, for many applications. And this is where we are working mainly in Africa. It's not for the potable side. So I have this inclination towards desalination. And also desalination is industry or segment of the industry that's going to grow, because efficiency is becoming more efficient, coupled with renewables now. Renewables become cheaper. So for me, it's a growth segment that will really grow. So I had this domain registered like almost 12 years ago. So I said, okay, when I want to start my company, I said, you know what, I'll use this one. I have another one which is interesting, watertreatment.com. But then I said I'll keep it for something else later. So that's how it started, and also I like the name, it's cool.
You're mentioning the domain name. Yeah, that's exactly what I thought. Because I was looking for your website, and I just saw that I couldn't find one. And now I just tested to use this Desalytics.com, and I see that it's redirecting to LinkedIn, which is kind of the same approach you already had as an influencer on LinkedIn. And I was wondering about your marketing approach there, because clearly you're going into content marketing and pushing that content marketing approach first. And that's probably a question that would interest my partner in crime, Björn. Are websites dead?
So websites are not really dead, because if you integrate them now with all the tools available in terms of productivity tools and also content marketing and redirecting and productivity tools, all of this, it's not yet dead. And we have a plan for the website. It's not yet up, but we have a plan for it. So they are not yet dead. Okay, but what we're doing now, we've implemented something called the Desalytics growth engine. Okay, and it started as a commercial engine. Now it moved to a Desalytics growth engine. And our approach is that you need to have a fully integrated solution. So basically, we have tools that we implement across all these companies. So once we acquire a subsidiary, we implement tools with the logic that these tools will help us to grow the company 10 times in 3 years. And we are on track in doing it, so 10 times in 3 years. And these tools are around 3 components. So lead generation, funnel management, and also customer retention. So basically initiating leads, nurturing the leads, closing the deals, and then keeping recurrent business coming and flowing through. So in terms of tools that have been implemented now, so it's almost like around 18 tools out of the 3 segments. We're now focusing a lot on the funnel management part because we don't want to be generating leads, content management generating leads to us, and then we don't know how to deal with the leads. We don't know how to manage them, we don't know how to grow them, nurture them, and so on. So now we've deployed a CRM system across all the entities with a focus on funnel management. So basically teaching the team how to manage opportunities, weekly reviews, funnel shape, size, all the terminologies of funnel management. Once this is fully established and we have the expertise and also the scale across 10 subsidiaries, then we will move to the content marketing part and the website. So this is where we'll start the lead generation, either is it organic or through search engines or, remarketing and so on. So this is where we go into this second part because we don't want to generate all the leads and then customers have a bad experience because we cannot manage them.
But still, talking of content marketing and funnel management, at the very top of that funnel, when I saw you organizing those very interesting conferences with some brilliant African minds, to me, that was obvious that you were working on the top of the funnel. Of course, it was informative and it wasn't only for lead generation, but still, it places you as an expert in the African area, if that was still to demonstrate. But what was your background story around these conferences?
Correct. You're absolutely spot on, Antoine. In fact, those calls that we started, those webinars and bringing more young people from Africa to have this discussion is basically to drive awareness, as you mentioned. So we don't want to be going after customers, look, here, come buy from us. We want to have a kind of a journey where customers are part of our journey and they are growing with us. So we tackled the talent in Africa. It's a big challenge for young African people in the water space. It's a big challenge to find the right job. So we tackled the talent one. We tackled also the gender diversity in Africa. So gender diversity focused on Africa. And the idea is to be close to customers. And also, as you mentioned, so it's part of the content marketing strategy, but it's like the call. We had a call also with Bjorn, on this topic. So it's kind of becoming relevant in the space. So people come to you later when they have any need.
You are present in 10 countries right now, right?
Yeah, almost. We're at 7 now.
7. Well, 7 in 1 year. I mean, many companies are looking at you and probably asking how you do that. But my question here is, so you're active in 7 countries. You're planning to have 10 in a very close future, and the target is to go to 2022, so half of Sub-Saharan Africa. You're still running the Water Questions, so you are very active in the content approach on LinkedIn and other platforms. You are now organizing some conferences. How do you do all of that? How do you pack all of that in a day?
It's challenging indeed, but for Desalytics, we've done it in a way that is more like a hands-off type of model approach. So basically, every entity is kind of independent. So for example, the team in Zambia is completely independent. They come to me when they have a need, when there is a challenge, but I'm not running the business day to day, so I'm more providing strategic guidance and tools.
But you mentioned Cameroon, where it's a startup and where you are actively involved in a startup. And I think every startup builder knows that it's going to take probably 200% of your time.
True. But again, we have a good young talent in Cameroon leading the business. So what I'm doing is kind of putting the processes in place that can be replicable in every country. They can use them and pick and choose what works better for them and use them. So basically, I don't have to be myself very involved. But I agree with you because it doesn't stop here. Like what I'm doing, for example, I go to countries. I spend most of the first 6 months of the year in countries in Africa. So basically helping the team to meet customers, to bring in this level of expertise, to coach them in terms of selling, in terms of mentorship, in terms of hiring, in terms of leading the business, having funnel reviews. So it takes a lot of time, as you say. Definitely, it does take a lot of time. But, I've been in multinationals for 20 years and the rigor and the calls and so it's kind of a little bit easier.
You mentioned your target to multiply each of these subsidiaries by 10 in 3 years, which brings me to one of my favorite questions on that microphone, which is hypergrowth possible in the water industry? And I think that your target clearly answers with a yes. Is that true?
I think it depends on the market, the market and the industry. So we've picked a market that is kind of underserved, with a lot of potential. So you have several growth dimensions there. It's not like just a organic growth model. So you have a lot of growth dimensions. I think it's the product portfolio, or maybe is it through the industry served, and even hiring more people and so on. So there are a lot of dimensions for us to be able to grow. So I agree with you. Water industry is challenging. It's one of the most challenging segment to work in. And from outside, people think it's sexy, water scarcity. So you've got a lot of business, everybody needs you. But it's very competitive, very commoditized. So you have to be very selective on what you're targeting and how you approach it.
You mentioned the growth engine that you're building with the different subsidiaries of Desalytics. What about the fuel of the engine? Do you partner with capital investment, with investment funds to bring or to speed up the process? Or is it more of an organic growth where you, with the mother company, you can finance all the subsidiaries?
So for now, it's still run as an organic model, because the idea is to test the model and show it works, and we've had some successes now for the last almost a year now. So we've had successes, and next year we'll be going after to scale up faster and quicker. We'll be going after raising capital. But as of now, we're still sufficiently funded and focusing on putting the building blocks first, to show that how it's really successful. So I'll give you an example, like the 2 subsidiaries we acquired early in the year. This year we're doing around 3.5 times growth, so we will not see this in developed economies, so that's why the focus on this area.
Unless you're Twitter or you're Uber and you can burn a lot of money, but 3.5 in an organic fashion is incredible.
It's a good point you bring in, like burning money, and our business model is at having the entities profitable from day one. If you look at all our entities, with the exception of Cameroon, which is a startup, if you look at all the other operations, they are profitable. They are not like burning cash. They are maybe adding cash for inventory, but not losing money.
So that means that you are you are achieving hypergrowth by being profitable, so not burning money. It sounds to me like you're really onto something big from my very little position here.
It is, Antoine. It's interesting because for now we've focused on small deals. So the next step, once we were able to raise more capital, then we can scale it up in terms of size of the acquisitions, because then it will become even more sizable. And it's not about becoming big. It's more about having enough scale to make an impact.
Talking of that impact, you mentioned you have high targets for next year. What is on the table for next year? Opening more countries, keeping the growth pace in the existing countries?
Well, next year is going to be very challenging because we've set up a lot of expectations, and I'm sure we'll have to trim them down and try to find what's really makes sense. So for example, we have the plan of getting to the 20 countries, which is for sure one of our main targets. Okay, but also we have a project of having a localization of our supply chain. So basically, you have all products available, but at the right point in time, so you don't burn a lot of working capital in terms of. Also, we're starting a small R&D system to check what are the products that we can either manufacture in country or even white label. Because at the end of the day, if you want to make scale, you need to have also some products that you can control the supply chain directly from end to end.
So somewhere down the line, you have 20 countries open in the Sub-Saharan region. You have your own product line and you can produce a part of this product line locally. That's the plan.
Correct. So once you have the footprint, you have the local footprint in terms of commercial footprint across all these countries, then scale will help you to be able to produce your own products. One more project we'll be very busy with is that the digital marketing part. So as I mentioned, now we're building mainly our infrastructure, but next year we have to move to the digital marketing part because we will be present in multiple countries. Then it will make sense to go after this, either through inbound campaigns, targeted inbound campaigns, real-time lead generation, content marketing, but really directed content marketing or centralized and local campaigns, and so on. So next year, this will be more the phase where we go more on the digital side.
And what will tell you that you've succeeded in maybe 5 or 10 years? What is the impact that you're looking and aiming for?
I think for me, the impact is mainly on job creation. Of course, the financials are part of it, but I mean, if you want to measure real tangible impact, it's basically job creation. What type of mix in your employees you have? So, for example, today you focus a lot on having working mothers and also gender diversity and so on. So the mix of the talent you have in your company, also job creation and also impact on customers. So for me, one of the things I really like when I go to a customer, we have a deal with them, and then 3 months later they order again from us. So it means we're making an impact. We're not just being seen as a supplier. So this type of social impact investment opportunities that originally Desalytics was built on.
Well, it's a impressive thing you're building, and it's an impressive path you're on. I think we've made a good tour for that deep dive, unless I missed something big on Desalytics.
I don't think you must pick anything big, but it's a good story, and it's still, like in progress. So maybe next year, if you have our call, we'll have something different to talk about, because it's a learning in process business model, and we didn't set it up as casted in stone. Okay, this is what we want to achieve, and this is where we will be, because you said that Africa is diverse. We don't really know how it's going, so we're going to see how it goes and adjust with time. And that's a good thing about being a small company, is that you can you're agile. You can adjust anytime. I had a marketing teacher who used to say that the cost of being late exceeds the cost of being wrong. So basically, if you think a lot and then you don't do anything, then you'll be left behind. And then his sentence was that throw it up in the air and fix it on the fly. So just launch it, and then see. He's a marketing teacher at Harvard, so just launch it and then you'll see how we fix it. Don't worry about this part.
I heard 2 different versions of that one. The first was done is better than perfect, which I fully subscribe to, and which is exactly what you said. And the second was, exactly. It's free flight, and then you're building the plane around it, and you're hoping to have built the plane before you touch the ground, because if not, you crash. So I was just trying to keep the door open, just because those days you're regularly announcing a new country, which you opened a new thing, and I was, hey, maybe I can have a scoop, and you can just give me a new country you would be releasing in the next 2 weeks or something like that. So, but okay, I tried it.
Nigeria.
Nigeria.
Yeah, it was complicated. So because we went down with a partner first, and we backtracked. The regulatory environment is quite complicated, and you really need to navigate through the right partners. And I'm happy that now we have the right partners, and I'll be announcing later about the partnership. But it's being built as a really solid foundation, so then it can scale.
Just for me to understand, when we say Nigeria, sometimes to me it sounds a bit like if we were saying a country like Europe. Hey, Europe is a country, because that's, from the magnitude of size, it's quite similar. So does that mean that you're starting from Lagos, for instance, and then you're saying, okay, one day will be so big that we can cover the country? Or could you, even within a country, have different subsidiaries of Desalytics?
Our potential partner, the partner we're signing with, is that they are already established in multiple cities, and they have the relationship with the industries we're covering and so on. So basically for them, it's kind of a expansion of what they currently do, but more on the trading side of consumables and water testing, water quality.
Well, I'm hyped, so I'll watch the news to be sure to to get it when it's out. Walid, if it's fine for you, I propose to switch to the rapid fire questions.
Definitely.
It's time for the rapid fire questions.
So I tricked you because I sent you the rapid fire question, which I usually send for my first time guest. But as you already had that set, I have the second set of questions, which is for my returning guests. And my first question is, what is your favorite part of a project?
So basically, in project, my favorite part is the team you're working with, just trying to build quickly the relationship with the team, or else it will be a completely flawed project. So trying to get to know all the people around you in this project on the personal level, not on the project side, it will make a big difference.
is there something you're doing today in your job that you will not be doing in 10 years?
It's a tough one. So, because I don't know what will be my job in the 10 years time, but
yeah, when I see how much it's changed in 1 year,
yeah, correct.
I guess it's hard to see what it would be in 10 years.
I can tell you the opposite. What I'm doing today, I was not doing last year, for example, or the year before. Attending all these, corporate calls and all the matrix environment and driving all through all this maze of large corporations. So this is what I'm doing today. I'm enjoying. I'm not doing anymore, and I'm enjoying.
Okay, I get it. You changed the question, but your answer is cool, so I accept that one. What is the trend in our industry that you would like to see ending and disappearing forever?
I think there's something that everybody talk about, water scarcity, and they say like, okay, wars are going to happen because of water scarcity and so on, and all these big talks. I don't think it's going to happen anytime. I mean, we talk about war, but we haven't seen any major war done because of water scarcity. So I'd like people to stop talking about it and talk more about the solutions and how we, as a human beings and also as a water industry, we managed to make water cheaper to produce than any other arm or bomb, or plane or anything needed to make wars. So technology has really evolved to a point that it's much cheaper to produce water than fight for it.
Let me sidetrack you here. I shortly alluded to it earlier in our conversation about this SDG 6 not on track of happening by 2030. I think we are progressing at 1/4 of the speed we should. And you are at the heart of it somehow because, as I mentioned, Sub-Saharan Africa is one of the places where we will definitely know if we make it or if we fail it. What is your feeling there? Do you see stars aligning?
I think yes. The challenge with the SD6 is that it's driven by the governments, and we all know that public entities are slower than private entities. Doesn't mean that they do the right thing or the bad thing, but they are slower because of the bureaucracy they have around. So we will get there. Maybe we'll be delayed, but we will get there. Because what's happening is that, the Maslow's hierarchy of needs. So basically for human beings, first they need security, they want water, shelter, and so on. So these are basic needs. You're not talking about something that self-actualization on the top of the pyramid. So we're just basic on the basic needs. So it will happen because people are having, as we mentioned earlier, better disposable incomes and so on. So if the government doesn't address it, you will have people addressing it by themselves. And today, the circular water is becoming more and more cheaper to implement. So basically, if you have your own village, you can easily install a recycling unit and you'll get more water out of it, and so on. So the private sector will really take the lead. Might take some time, but it will happen.
I hope you're right. And I'm sure if someone has a clue about it, it's you. So I'm kind of happy about the...
Thank you. It's a stretch, but thank you.
Last question. Can you name one thing that you've learned the hard way?
I'm the type of person who build a relationship based on trust, and then after we see what happens. So we've had few of the deals we're trying. We could have been gone faster, but some of these we've done did not work out. And but there are always lessons learned, and this is how you keep improving yourself and fine tuning the business model.
So you're saying that some deals didn't happen. Does that mean that you're somehow targeting the 43 countries and then seeing that probably 22 stick, like you send them on the wall and the one which stick on the wall are your countries? Or do you really target 22 countries?
No, so we have a target approach on the countries, 20 countries in 2022. So we have the target approach on the countries. But what's happening is depending on how fast we're moving in some of the deals, it's triggering where we go first. So it's not that we said, okay, we want to be first in Kenya, then in Zambia, then in Uganda, and so on. So we said, okay, these are countries where we need to be in. And based on the maturity of the deals and the connections we can build and the opportunities we find, we'll go faster and so on. But it doesn't mean that let's say, if there is an opportunity in a different country, we will not go. So I'll give you an example. Like Algeria is not part of our strategy, but at the same time, one of our suppliers is asking us to go to Algeria. So we are now in thinking like, shall we go there? Shall we not go there? So is it a distraction, or it's better? It's helping us to grow faster and have a bigger footprint in Africa. So these are the trade-offs we need to make.
Well, I think that's the kind of trade-offs that we can assess next time you're on that microphone, because I like this habit of having you on a regular basis, just because you're progressing at a pace which is absolutely unique from what I see from the water industry. So Walid, it was a renewed pleasure to have you on that microphone, and that microphone is open to you whenever you want. So thanks a lot.
Thank you, Antoine. And thank you. I really appreciate being here. And it's amazing how your shows have evolved since last year. It's like we talked a lot about me, but I mean, when I look at your shows, how they have evolved, the people you have invited and so on, I think I'm really honored to be again back on the show and still have time, to include everyone. So it's really a pleasure to be here and showcase at least what we're doing in Africa. And maybe people can hear this talk and help also.
Well, really, thanks, but my pleasure. So yeah, talk to you soon.
Thanks, Antoine. Take care.
Thanks for listening to Don't Waste Water. This podcast was brought to you by GF Piping Systems. Loved this episode? Head over to Apple Podcasts to subscribe, rate, and leave a review. See you next time.